20-3 work together. Use the following information obtained from the records and management of Goldsmith Company to estimate the cost of the ending inventory on June 30th. So they've laid it out really nice for us. They've put all of the steps out. We just need to fill in those numbers for step one. So number one, step one, it says beginning inventory on June 1st. That is just this number here. So 77,400. We're going to add to it our net purchases from June 1st through June 30th. So here is our actual net purchases. So we're going to put in 23,900, and we're going to add those two numbers together. Okay, that's going to give us 101,300. All right, step two, net sales for June 1st through June 30th. So now we need to make sure that we're looking at net sales, not net purchases. So 122,500. Then we're going to multiply previous year's gross profit percentage. They give that to us up here, so 45%. Multiply those two numbers together. We should get 55,125. Okay, now we're going to take our net sales for June 1st to June 30th, which is the same number that we used in step two. So 122,500. We're going to subtract from it our estimated gross profit on operations. That was the number we figured out in step two. So 55,125. Going to subtract those two numbers. We should get 67,375. Step four, we're going to take our cost of merchandise available for sale, which we figured out in step one. So this number here, 101,300. Subtract estimated cost of merchandise sold, which we figured out here in step three. So 67,375. We're going to subtract those two numbers. Which gives us 33,925. Grade step one. And I'm going to move to step two. So step two, up here at the top, they give us what we completed in step one. And then it tells us that we're going to use the information provided in the question assets to prepare an income statement for the month ended June 30th of the current year. Okay, so our first thing is we need to put in our net sales. So we're going to get our numbers from up here. We're going to look at what our net sales was. Here it says net sales for June 1st through the June 30th. So we're going to put in 122,500. Okay, then we're going to put in our beginning inventory. So if we look in step one, it shows us our beginning inventory was 77,400. We're going to add to that our net purchases. That's going to be step one, so 23,900. Our merchandise available for sale then is 101,300. Notice that is just step one. Okay. Then we're going to subtract from it our estimated ending inventory. So when we look up here, we're going to find our estimated ending inventory. That's what we figured out in step four. So 33,925. We're going to subtract those two numbers. Okay, that gives us our cost of merchandise sold, which would be 67,375. That number also comes from up here, so we can double check to make sure that we're right. In step three, we figured that one out. Okay, gross profit on operations. We're going to subtract those two numbers. We should get 55,125. Again, we already figured that number out. Here's our estimated gross profit on operations, step 2. It gives us our operating expenses. So we're going to take our gross profit minus our operating expenses. Now that number is not a number that we can check. So that we're going to have to subtract gross profit minus operating expenses. Okay, so the last part then is we need to figure out our percentage of net sales. Okay, so remember when we do that, our net sales is always going to be at the bottom. We're going to divide. So here we're just simply taking net sales divided by net sales, which will give us 100%. Now remember on this too, we're going to round to the nearest 0.1%. So we need to put that 0.0 in, otherwise it will count it wrong. Okay, for this one, we're going to take the cost of merchandise sold divided by our net sales to get 55.0%. Now we're going to take our gross profit on operations divided by our net sales. We should get 45.0%. Okay, we're going to take our operating expenses divided by our net sales. This one we should get 31.4%. And then the last one is taking our net income divided by our net sales. And that we should get 13.6%. We can then grade our final step and save and continue. We are now done with chapter 20. Make sure that you're paying attention to due dates on Aplia and on Daily Planner. Also make sure that if you have any questions that you're asking me right away.